Hi, I'm Cardiff Garcia, and this is The New Bazaar. Coming up on today's show.
There are no eternal verities of markets, because if everybody knew that the eternal verity was there, it would disappear.
Rob Armstrong on the taco trade, are markets in a bubble, and how not to get dressed in the morning. Hey everyone, Cardiff here. We are recording on Wednesday, July 30th, and I'm in the studio with our guest, Rob Armstrong of the Financial Times. Rob, excited to do this?
I am really glad to be here, and I'm really glad to be here, this particular place specifically.
This place and time right here,
now?
9th
Avenue between 4th and 45th.
Yes.
Because 25 years ago, when I was a younger man of simpler tastes and less means, the bar across the street, Rudy's, was a major hangout for me. I don't know if this is still true.
A neighborhood joint for you.
But then their thing was free hot dogs.
Okay.
So I would go in there as a young graduate student and drink Boilermakers and eat free hot dogs.
What more could a young man want?
Man,
what more
those
could
were
a young
good times.
philosophy PhD candidate
Those were
want?
the golden years as far as I'm concerned.
Let's introduce everybody to who you are, because as of right now, all they know is that you drank beer and ate a lot of hot dogs a quarter century ago. You are the Unhedged newsletter columnist at the Financial Times.
Yes.
You are the co-host of the Unhedged podcast with Katie Martin, which is awesome.
This is all true. I wish Katie was here too, but she's in England, so
she is
it's hard
in England
for her to be here.
And you are, as some people may know, the guy who coined the term the taco trade, which stands for Trump always chickens out, and has had quite a reverberating effect on Wall Street, on commentary about markets in the last few months.
I don't know if it has had an effect or it is an effect. As you know, the direction of causality in matters economic is always a little hard to tease out. But it's caught or labeled something about the zeitgeist right now.
Yeah.
And that was, nothing like this has ever happened to me, where I literally invented this dumb series of letters simply because I was referring so much to the phenomenon of Trump talking big and backing off that I needed a quick label so I could just say it and then go on to say something new or more substantive.
Yeah.
But then it started appearing in brokers' notes, and then it appeared in the New York Times, and then momentously for me, a reporter brought it up in a press conference with the president, and he was not amused.
Oh, we're going to talk about that, believe me. I can't wait to talk about that. We are also going to talk about whether markets are in a bubble or
Great
how
question.
frothy they might be. It's
Yes.
something you've been writing about. I want to point out to people also that you formerly worked for a hedge fund before you made the financially catastrophic decision to become a journalist.
Yes. So actually, I'm thinking of writing a book about my career, which is going to be called Failing Your Way to Success.
Okay.
So first thing I wanted to do is I wanted to be an academic, and we can talk about philosophy later, but I got a PhD up at Columbia in philosophy. By the end of that, I was 30-ish and was married and realized I wasn't going to be a wildly successful philosopher. Mm-hmm. We can talk about that,
A tough
why
moment.
that is.
Yeah, it's like when I realized I wasn't going to play in the NBA.
Yeah, it's the same
tough.
thing. I could have taught somewhere, but like Harvard wasn't exactly banging down my door. I'll put it that way. So anyway, I say, what am I going to do? And I kind of nepotism my way into a job in finance. And I worked for 5 years at a hedge fund called Seminole Capital Partners, a long-short equity hedge fund, which was a tremendous education and very stressful, and reached its crescendo with a little event called the Great Financial Crisis.
Yeah.
At which point I was called into the office by the partners who said, Armstrong, we love you, but we're going to get a lot smaller now, and that means it's time for you to go.
Yeah, I imagine that was happening to quite a few people.
Indeed,
around
and I felt
2008.
some relief. It had been a very stressful 5 years. I got some money to walk away with, and it had been a hard year. But then I'm like, at some point you need a job. Right around this time, my wife is like pregnant with twins and I'm unemployed and things are happening to me,
Okay. No, we're gonna talk about the decision to do that at some point. And also just the difference between understanding and writing about financial markets versus having worked in them. But what's clear is that you are a man who has worn many hats.
Yes.
And that's not just figurative, that's also quite literal, because you at the Financial Times also write a lot about style, which is a passion of yours.
True.
Menswear specifically. So at the end of this chat, we're going to have a little menswear fashion segment, and that's not because we want to exclude the ladies. It's just because you and I have absolutely no good advice for them.
I have found one thing I've learned in my career is when it comes to women's clothing, keep your mouth shut.
Okay. Unless you know what you're talking about. Absolutely. Okay, so let's go through these. I want to start with Taco. We have to talk about this because I feel like it's been such a big part of the conversation over the last few months. And to remind listeners again, Trump always chickens out is the basis for the acronym. But the idea was that Trump would announce a huge set of tariffs. Yes. The markets would collapse. And at that point, because the market collapsed, we think, Trump would then walk back the tariffs or announce an extension, during which to negotiate with other countries, that kind of thing. And then markets would go back up. So if you bought when markets were down, expecting Trump to walk it back, you could make a lot of money.
Yes.
That was the basis
and it was
Taco.
For quite a while. You could say even up until now, that's been a pretty good trade.
Yeah.
But you might also argue that however many months later, 3 or 4 months later, Taco is no longer true. That you might argue, I would dissent from this, but people certainly email me to argue, he's slapped 15%, broadly speaking, on the world on average, and he has not backed off. So you have to be a bit precise by what you mean by Taco. And like any good slogan, Taco means whatever the person who says it wants it to mean. But to me, what Taco means is when push comes to shove, the president actually doesn't care very much about any given economic policy. Mm-hmm. So if he faces significant resistance, political or most importantly, resistance from the market, he will back off because he just doesn't care that much. Trump is a complicated guy, and it's hard to know what he's going to do. He's not a very predictable guy, but my black box model is pressure goes in one side and him changing his mind goes out the other side because he's not that concerned.
When it was first shown to him, when that reporter first asked him about it, I found myself wondering, God, I wonder what Rob is going through right now. I wonder if he's like, oh, come on, man. Like, I was just writing a column. Like, it had kind of gotten away from you. As you said, people were using it to mean whatever they wanted it to mean.
Yes.
Wall Street analysts were writing about it. Now it was in the media.
Right.
It was sort of out of your hands at that point, right? It had gotten away from you. And when that happened, I'm just very curious to know what your reaction was.
I mean, I was watching the press conference, coincidentally, and, I kind of went numb. I was like, who is Rob Armstrong? Rob Armstrong is a middle-aged finance writer from Brooklyn, right? And suddenly this thing is happening involving the president and something I said. And it seemed like a pretty dramatic reversal of the natural order of things to me. You know what I mean? The world acts and I react. And somehow something I said got involved.
Causing the world to react instead.
Yeah. So, everything that's happened since then has just been an education for me. I have no context for any of this stuff. It's just kind of weird. What I would say, though, what I would reiterate, though, is these things do get out of your hands, and they are used in different ways. I think the reason it caught on is because it captures something about the president's personality generally, that he's a kind of puff out your chest, wear a brightly colored tie, talk loud kind of guy. And I think we all sense that this is a bit of a facade we don't quite buy. Even I think the people who like him will say that there's something performative and slightly, there's something fake about him but not necessarily in a bad sense. There's something
or
theatrical.
It's an
something.
Opening gambit as part of a negotiation is what people like to say. And that you make the big splash so that later you're anchored on a very high tariff rate.
Yes.
So you end up with a lower one and it seems like it's fine, even though that lower tariff rate is still much higher than what you started
Correct.
with.
So did that work? This is a crucial question. So the FT editorial board, in a moment of terrible personal disloyalty to me, had this editorial, I think today, that was like Trump's strategy has broadly worked. He anchors, he frightens the other side with this huge number and then works his way down to a number that now looks better than it could have been, but is still actually pretty high. I would put it slightly differently. What I'm surprised by is that there's no pressure on him to go any lower. Like the UK, Japan, the EU, they really seem to have not put up much resistance. Nobody escalated, and the market has looked at 15% tariffs, and we can talk about whether this is a good judgment on behalf of the market or not, and sort of said, meh, it's not really going to make that much difference to the growth of the economy or the growth of corporate profits or whatever. So I would say the taco trade in a somewhat diminished form survives simply because there was nothing for Trump to chicken out from. Nobody pushed back.
Yeah.
Right?
So there's some things to separate there. One is whether the strategy, quote unquote, worked in the sense of Trump getting higher tariffs versus the strategy working as in it's a good thing for the U.S. economy. What's been interesting about all this is that people are framing it as, quote unquote, Trump won, whereas I'm sort of looking at it as like, well, the U.S. has higher tariffs now. Like American businesses and consumers are paying higher taxes. The EU, Japan, the UK have essentially chosen not to escalate, which if you ask economists, they'd tell you that is the wise, prudent strategy.
Right.
And I don't know if that's right or not, but like it's strange to just leap to the conclusion then that they're the ones who screwed this up. Whereas, like, again, it is Americans who are going to be paying more for these products. But I am also interested in the other ramifications of labeling the taco trade. One that's very interesting was one that your co-host on the Unhedged podcast, Katie Martin, pointed out, which is that she said that the taco trade was at risk of eating itself because what ends up happening is that if people expect the walk back, they expect Trump to eventually chicken out anyways.
The market doesn't go down.
You don't get the market response, which is the thing that caused him to walk it back in the first place.
Yes.
And so that can be a problem. So just psychologically, it's a very interesting phenomenon.
That taco paradox, your friend and mine, Matt Klein, labeled it the stupidest form of reflexivity ever witnessed in the wild. You know what I mean? But it really is true. And this is my point. Like the market didn't push back against Trump.
Yeah.
The market is accepted. And my view is that the stock and the bond markets are a bit myopic. They have this reputation for discounting everything that can be foreseen infinitely into the future. But in fact, I think bond and stock markets are quite myopic. And most of the bad stuff this poorly designed tax is going to do is going to be very long-term bad stuff. Like it's a poor incentive that will do damage in a kind of accretive way over time.
Yeah, to American productivity growth and things like that.
Competitiveness, which products we buy, which products we make. We'll be making bad decisions a little bit at a time for a long time.
I was talking to a colleague of mine at EIG about a different kind of chickening out. Like the chickening out part sort of migrated elsewhere.
Yes.
And it goes something like this, which is that part of the aim of the tariffs was to get all these other countries throughout the world to open up their markets to us, to spend more money in the U.S., et cetera, et cetera. And when the announcements are made with Japan, UK, most recently EU, it sounds like that's what's going to happen. And then when people go looking for the fine print, either it doesn't say what Donald Trump said it says, or there is no fine print. Like the promises of all these purchases of U.S. goods abroad, that's just something that it's air. These are words that were said in front of cameras. There is no binding rule that says that actually has to happen. And in some cases, they're not realistic.
We had an argument on the newsletter about when we write the phrase trade deal to describe these things, should we put the word deal in quotation marks? Because real trade deals are extremely complicated because trade is extremely complicated. So like what counts as a product from Japan? You have all these weird inputs to that, and then it goes to different places. And so a real trade deal has an incredible amount of detail in it, all of which is agreed, and it's very product specific, and it's signed, and et cetera, et cetera.
And there are rules, and then there are like very explicit punishments for those rules, how to mediate, et cetera.
None of it. These are handshake deals written on the back of a bubblegum wrapper, and they say, you promised to buy all this stuff. None of this appears to be legally binding, and indeed, as I'm sure you've noticed, maybe just illegal under U.S. law for the president to negotiate these kind of deals in the first place. It may be, and the courts are trying to figure out now, that he has stolen authority to do this from Congress in an important way. So none of this may matter in the end.
I love the psychological angle to all this, how the feedback loops actually work.
Yes.
Another one of your colleagues, Tim Harford, sort of analogized this to like Greek tragedies, which is when you try to predict the future, in this case, the taco trade. Make the taco trade. Markets go down, buy. Then you make money when they go up after the chickening out and all that stuff. When you try to predict the future, you end up altering it. Which is, of course, the subject of so many Greek tragedies.
Yes.
And I'm fascinated by how all of this works. And I knew with your philosophy background in particular that you'd be thinking about this.
I think these kind of feedback loops that you just described are the defining characteristic of markets. You've just described, in a way, the most important feature of markets. This is why all efforts to have a system where you can predict what markets are going to do or use a valuation to determine what future returns are. All of these things trip over themselves. All of these things, they fall into these feedback. Markets are dynamic. They are constantly changing. There are no eternal verities of markets because if everybody knew that the eternal verity was there, it would disappear.
Right.
So
we should be more explicit about this for listeners who aren't familiar with this element of markets. But this is the idea that if you know that a stock is going to be great, and make you all this money, okay, if you're the only one that knows that, amazing. Okay, you get to buy it. If everybody knows it, then everybody's going to buy it, pushing up the price, which means that no longer holds.
Disappears.
Yeah, the advantage no longer holds.
There was a quote, I forget the jazz musician, but this was in the 40s or something. Somebody asked this famous jazz musician, like, where is jazz going? And he answered, like, if I knew that, I'd already be there.
Right. The essence of markets right there.
Yeah.
Let's talk about American markets now.
Yes.
You've been writing a lot about the question of whether or not American stocks in particular, specifically right now, are overvalued. Are they too high? A lot of people are wondering, like, well, if these tariffs are so bad, then why is it that markets are still so high? And also, if the economy's slowing down, maybe not, hard to say. But if it is, then why is it that the stock market keeps hitting new highs? Just like this week it hit another new high, right? And
it's been incredible.
You've been sort of, I want to just quote you here because I love this quote. You said that right now, you're talking about the American market, it feels eccentric and unreliable, like an aging relative who no longer cares what others think and who may or may not be taking his pills, but is not quite bonkers either. So this is like, I don't know, this is like Uncle Ronnie who's like, hey, invite Uncle Ronnie to Thanksgiving. He's super fun. If he has an extra drink, who cares? But we're not going to like let him do the family taxes or whatever.
We are not letting
that
him.
Kind of thing.
He's not a good accountant.
That's the market.
I mean, I feel that's true. So things that make me jumpy about the markets, okay? Meme stocks are back.
Yeah.
So stocks like Krispy Kreme, which is like a fundamentally quite weak business, is being chased up. There's kind of retail investors chasing short sellers out of stocks again. This is all stuff that is reminiscent of 2021, which was the last time markets got overvalued and we had the horrible correction of 2022.
To be clear, meme stocks are when like a lot of retail traders who are like individual traders, like me and you, not like big institutions, but they start chasing stocks just to chase the stocks, even though those stocks represent companies that aren't necessarily like killing it.
Paradigmatically, GameStop
they make, right?
Which
GameStop
was a bad business, and they, and they chased it up, and it's still up.
And it's
not
still
as up and
right.
much as it was. So that's something that makes me nervous. The price of Bitcoin makes me nervous.
Yeah.
Just as a symbol of people's risk appetite. Like, let's roll the dice on Bitcoin. And again, that was something that we've seen fluctuate wildly in the past. The old-fashioned way of thinking about this, which I have very mixed feelings about, is in terms of how many dollars of profit for every dollar of stock price you pay. So the price-earnings ratio or whatever, people have a million different versions. Just valuations are really peaky right now.
Yeah.
Stock prices have grown a lot faster than profits. So you're paying a lot more for those profits than you used to. Now, this doesn't tell you anything in the short term, as I wrote in the column yesterday, but it does give you a sense of the kind of exuberance of people out there. And there's just other weird stuff going on in markets, weird price action that makes it feel like one of those moments where emotion is in control, positive emotion is in the driver's seat. And that can go on, by the way, for quite a long time.
It doesn't mean the stock market's about to fall.
No. And indeed, usually you get a rip-your-face-off rally before the final crash. In other words, the last phase of overvaluation is really fast increases in prices. And I don't think we've gotten to that point yet. So we're not at the crescendo.
Yeah, you've listed a few what might be referred to as minor manias, and you had this other line you said where there's one of those, they're like cockroaches.
Yeah.
Where there's one of those, there's a bunch of others scurrying around, even though you may not even be able to see them.
Yeah.
You've got this other metric that you follow, which I thought was really interesting, which has to do with how much money people are borrowing to buy stocks, right?
Yes.
How levered they are to stocks. You refer to the Levkovich index, which includes a measure of that.
Yes.
But you look at other measures too. Can you just say more about that and why it matters?
So, I mean, one way you can buy stocks is by borrowing money from your broker. And your broker will give you a certain amount of money to do that. And that FINRA collects the balance of all those borrowings. And so you can look
like
at it.
the organization that keeps track of these things.
It's like the industry monitoring, the industry's own self-monitoring organization. So you can watch that. And people are borrowing a lot of money to buy stocks. And there's all kinds of little things like this. Like in the options market, there's more demand to bet on future increases in stocks than there is for downside protection or betting on future declines in stock prices. All of these things kind of come together, and you can make a list as long as your arm of them, and they all have this bubbly, excited feeling.
Yeah.
But again, not wild.
Not crazy. High, not crazy.
I don't know if you have this experience, but for me, the run for it sign is when I'm drinking beer. Beer is becoming a theme here. I don't know why that is. It's a hot day in New York.
Me and you, come on. Yeah, it's fine.
You're drinking beer with a friend who is from a million miles away from finance, nothing to do with finance, and they start asking you what they should be buying.
Oh, yeah. This is like the proverbial, like, I'm getting a haircut and the barber's like, hey, so I just bought, I just put half my life savings into this new stock. And you're like, oh, boy.
Yeah, when the general public is sucked in by FOMO or fear of missing out, that is almost always a terrible sign. And I have gotten none of that.
You're not sensing that just yet.
I don't have these bonkers conversations with Joe or Jane Sixpack on the street.
Yeah. You also make the point that we've been talking a lot about retail investors, individual investors. You're saying that institutional investors are not quite as hyped up on stocks right now
the
as
tone
the others.
From things like analyst reports or the monthly comments from investors, there is a slightly cautious tone still, even as investors are increasing their exposure to risk, are kind of coming back to dollar assets that they were scared out of back in April. All that stuff is happening. But there is this underlying unease, for example, with the administration and how unpredictable it is, with the geopolitical situation, which I think is keeping things from becoming completely frothy and insane.
Yeah.
Right? There's enough overhangs that we're at least moderately sober. Yeah. We're only 2 or 3 drinks in,
but also,
as it were.
It just really is a bad idea to try to time big market moves generally.
Impossible. It's the worst possible idea.
Yeah, that's right.
I've done it. I mean, I feel like one of the worst, I'll tell you about the worst thing that ever happened to me in finance was that I actually, in my personal account, played the crash of the great financial crisis pretty well. Like when the market was down like 10% or so, and I had a lot of good advice from the people I was working with. I just got out altogether. And so I missed that whole thing and saved myself a lot of money. Congratulations, confetti fluttering down on my head. But from that experience, I came to think that I knew how to do that I could actually predict these things happen because I did it once.
Yeah.
It's like playing poker for the first time and winning and beating all the good poker players.
Because you got like an awesome hand.
Yeah, or whatever. You just had what they call beginner's luck or whatever. And that cost me so much money in the 10 years after that because I was like, the market's too expensive. I'm not getting in. And basically, I missed the whole climb back because I thought I understood more about the market than I really did, and I failed to be sufficiently invested. So I got paid back for my intelligence with proof of my own stupidity and in spades, like from 2008 to 2018.
So eventually you learned the lesson. It
that
just
you
took
can't,
a while. Yeah,
you
it's tough
cannot
to do that. Yeah. I'm glad you brought up Bitcoin because that seems to be like the ultimate FOMO trade of the last, 10 to 15 years or something where a lot of people have been pointing out, correctly by the way, that it is a purely speculative asset attached to nothing with fundamentals. And yet, like, it has gone up so much. And now it's at the point where, because of some recent regulatory changes, I think it seems to be gathering a new kind of legitimacy, respectability, which doesn't mean it's a great investment. That's not what I'm saying. I'm not talking about its merits as an investment. I'm saying that societally, it's becoming a little bit more accepted. You know, at least that's happened in the last few years. It's not considered this like fringy thing quite the way it used to be.
I think it's really informative to think about gold in the context of Bitcoin, because a lot of the things you just said about the lack of fundamentals for Bitcoin can be said about the shiny yellow rock. And there was some weird human agreement early on that this shiny yellow rock was a really cool thing. But I mean, and there are industrial uses for gold, but they're pretty minor.
Sure.
The main reason to buy gold is because people like it. They like making jewelry out of it. They like having it. It's been a means of exchange for a store of value for a long time. So like, it's almost like the fundamental of gold is a kind of complex of human traditions and beliefs and feelings and so forth. And you could sort of construct a story about the future where Bitcoin is also the subject of those traditions and emotions and narratives and so forth. I am a Bitcoin skeptic, I should say. What I'm saying is, when I'm at my most skeptical, I think to myself, well, ultimately gold doesn't make all that much sense either. And that has been, although gold doesn't do a lot of the things people say it does, like hedge against inflation. Weirdly, gold is a bad inflation hedge. But over the very long term, it does preserve value.
Yeah.
And when things are awful everywhere else, gold does perform well. And could Bitcoin turn into that? I don't know why it would, but I don't know why gold did either. So
yeah. What is gold priced at right now?
It's $3,300 an ounce.
Yeah. So what's funny about this is we had William Bernstein on the show a while back, and he made the point in one of his books that back in the Roman days, an ounce of gold could fetch you a really nice, really fine luxury toga. And now an ounce of gold fetches you a really nice, elegant, made-for-measure men's suit.
Yeah,
right? Like,
it's about
it's
right.
basically the same thing
$3,300. Now,
for,
You know, it's funny, though. 2 years ago or 3 years ago, people were talking about gold, and the traditional number where demand is destroyed by the high price was like $2,100. It was like, after $2,100, the Asian buyers aren't interested. They're price sensitive. And we just blew through that and whatever. So maybe gold has become irrational now, too. You might look at the price of gold and see, like, it is lost track of itself, too. So, man, it's a lot to think about. But I remain, I think Bitcoin on a practical level is worse than gold in some important ways. Bitcoin's very easy to lose, as it turns out. Like the computer breaks or you lose the key or whatever.
Someone steals it.
Yeah.
Password, right.
And It's very, very cumbersome to transfer between people, which is a nice feature of gold is you can put a lump of it in your shoe, sneak across the border, and, have something to spend, on the other side. And in theory, that's a virtue of Bitcoin too. It's transferable on this decentralized ledger that's accessible all over the world. In practice, it hasn't turned out to be so easy.
Let me ask you about another market, which is the FX market. Because one of the things that people have pointed to in the last few months is that even as American stocks have been doing fine, the U.S. dollar weakened an awful lot in the months after the trade war started again, or accelerated again, I should say, and has not recovered. And it seems like that represents two totally different investment theses about American assets. One is, hey, like these American companies, like they're going to be fine. Let's keep investing in them.
Yes.
But America itself, which includes American companies, is not worth as much as it used to be worth from that standpoint. And I don't quite know how to reconcile those two things.
The currency market's really hard. I mean, it is by definition the most liquid market because it is the market for liquidity, right?
Yeah.
Which means
quite
it's hard to
literally.
predict.
Yeah.
And I guess I would preface this by saying everybody expected when the tariffs went on that the dollar would go up.
That is traditionally what happens, by the way.
That is traditionally what's happened. And just to prove how little we understand markets, the dollar did the opposite thing. And I don't know why it happened. The initial theory, of course, was, and I think this remains compelling, is that people lost their appetite for U.S. assets, especially kind of in April and May. They're like, the president's crazy. And because American assets have performed so well in the last 10 years, every investor in the world wakes up on the morning when they realize the president is crazy, which was the day of Liberation Day, and the big ridiculous cardboard sign, and says, I have 70% of my portfolio in assets from a country that is run by a crazy person. Maybe I better, it's not to say you're going to sell all your assets, but you're like, maybe I should hedge my dollar exposure now. And if you buy a dollar hedge, that has the opposite effect.
Yeah.
Dollar hedges tend to drive the dollar down. So maybe some of that happened. Maybe there was some buying. I think a lot of it's reversed, but there was some outright selling of U.S. assets, some flows out of the country. But I agree with you. It's been strange and mysterious. And I think what we can say with confidence is that it tells you the repercussions of the tariffs are not going to be as simple as the administration thinks they're going to be. That dollar weakness tells you it's not going to be a simple matter of the rest of the world opening its wallet and handing over money to the United States. The currency market has spoken, and it is going to be more complicated than that.
Yeah. In fairness, also more complicated maybe than many of us had anticipated, right? It's going to be very complicated.
This whole thing has been so surprising.
Yeah.
Every day, things are not happening that are supposed to happen.
One other thing was, a lot of people were saying, well, okay, if you're going to take your money out of U.S. stocks, specifically out of American companies, and you want to put it somewhere else in the world, I've been trying to think, where does that mean?
Yes.
If you look across the world, a lot of the at least comparable advanced economy countries have even worse, for example, demographic problems than the U.S.
Correct.
And I think people keep looking back to the U.S. and they see, well, they've got all these AI companies there now, and maybe the technologies of the future are still in the U.S. And I wonder if that's what's keeping a lot of U.S. equities high and preventing more people from saying, well, screw it, I'm just going to put my money in Europe or whatever. I don't know. I can't quite make sense of it either. And that doesn't jive with what's happening with the dollar either. So,
I mean, look, I do agree with you that there is a kind of weird imbalance between the equity markets of the United States and the rest of the world, Japan, Europe, wherever you want to, emerging markets. Their valuations are quite a bit lower. But if you look at the numbers in terms of growth in profits, you start to realize that American corporate capitalism is kind of one of the wonders of the modern world. Our companies, and not just the Magnificent Seven tech companies, but our companies in general are really good. They're efficient, they're productive, they're innovative, and they have consistently produced more growth in earnings than companies overall in Europe or Japan or whatever. So some of the gap in valuation is justified, is what I'm saying. Maybe not all of it, but generalizing across the market, America has the strongest companies.
Yeah, it's interesting. So the idea that these companies in other parts of the world are actually undervalued on quantitative metrics relative to the American stock market, the American companies. But if what you're betting on is growth, then America is still the place where investors are more confident is going to grow fast.
I mean, this is why Europe is such a fascinating story right now. One thing that we've become aware of because of the tariff stuff and everything else is that Europe's political structure is a real economic problem for Europe and for corporate capitalism in Europe. We've written a lot about this and done shows about it on the podcast about this. If you are an energy company or a bank or even a tech company in Europe, the fact that it's still in many ways 28 separate markets really inhibits the growth. Like there should be a European bank that's like JP Morgan in America. That's not just the biggest bank of Germany or Italy or France. There should be a European champion bank or banks, and there is not. Similarly, tech, similarly, energy. There are some in like maybe consumer goods or some areas where the market is more integrated, but that's a real problem for them. And people like the competitiveness report. Draghi. People like Draghi and Enrico Letta are writing these reports that are like, come on, people, we can do a lot better structurally as an economy. Because collectively, in terms of GDP or output or however you want to measure it, Europe is a lot like America. But politically, it's weaker in important ways.
I want to go back to talking about the tariffs again and what's going on with respect to markets versus tariffs. You write, markets weigh the near future heavily relative to the long-term future and only discount things that can be quantified crisply rather than speculating about the meaning of structural changes and trends. That's your quote, right?
Yes.
This is interesting. And by the way, it's a powerful statement to make about what you might call a chink in the armor of the efficient market idea.
Yes.
Because by the nature of efficient markets, markets are supposed to discount
into the infinite future.
Yeah, as
all
far
the
as
information that's out there.
As far as you can go.
Yeah.
It seems like maybe what you're saying here, though, is that they're going to overweight sometimes what's knowable in the near term, maybe because it is more knowable in the first place than what happens later on. I don't know, but I'm curious if you think maybe this also reflects something about the temporary nature of the tariffs and current policies and their unwindability.
Yes. Okay, so that's one point, is maybe even if the market doesn't think Trump always chickens out, maybe they think America will chicken out eventually. In other words, they will
in a good way. Chicken out's the wrong phrase.
Chickening
here, right?
out, but chickening out from a bad idea is something to be celebrated.
Yes.
Right? Quit while you're behind, as they say. Maybe some of that is being priced in. But let me put the harder point to you, which is this. You and I probably agree that if these tariffs stay in place for a long time, that is going to cause some malinvestment. Instead of investment dollars going into projects that are the most productive and have the highest returns, dollars are going to be drawn into areas that have tariff protection. And, the classic example everybody gives of this is, why is the only profitable product that American car companies can seem to make is pickup trucks? And it's because pickup trucks are treated differently in international trade than cars, right? Or at least this is how the story goes. Anyway, let's just imagine that there is going to be a loss of productivity because tariffs are distortive. We can say that in a very general way, taking a little diagram from a economics textbook. But when it comes to figuring out what that is going to cost us in dollar figures over 50 years, I wish you best of luck, Cardiff.
Yeah.
And it can't. So there's something that is bad, but you can't really count. And what does the stock market do? It counts things, right? And so the uncountable stuff that is real, the market's going to look past it, especially when the market is in a good mood generally about life as it is right now.
Yeah, your point about the tariffs on pickup trucks reminded me of something, which is that those protections on pickup trucks have been there for many, many decades. And part of the issue is that analysts would look at that and be like, but we have less choice and way higher prices of our pickup trucks.
Pickup trucks are expensive.
Yeah,
and
they're really expensive.
The companies that make them, those are really profitable products for them. They are probably earning back a lot more than their cost of capital on those trucks.
Yeah.
You know,
bad for the economy if you apply that across the board.
Yes.
And yeah, it's just a fascinating question of like the short versus the long-term nature of what it is that markets are actually doing at any given time, because that also fluctuates. It's not like we're looking at this in static terms and saying this is what markets do.
No.
We're saying this is what they might be doing at this very moment. You know what I mean?
Yeah. No, I think it's really important. And I mean, if there's a Rob Armstrong kind of view of markets, is that they're very protean. They can change a lot. What they do, it's not like the world changes and markets just measure those changes. What the markets do, what they pay attention to, how they function, how they value things, those things vary, and not in like a nice, smooth, cyclical way either. The market changes. What it's for changes. And the only possible response to that fact is humbleness.
Yeah.
Right, that you have a very partial picture. At the best of times, you have a very partial picture of what is going on, which is why, by the way, even the best investors, they have a hot period, and it could last quite a few years, but very few investors have a hot streak that lasts a lifetime.
For a long, long time.
Yeah.
Yeah. By the way, we've been talking mostly in terms of the riskier assets, right? The ones where you accept some risks, to buy what you buy. You hope it goes up, but it could go down. That's what it means for it to be risky. Treasuries are considered the closest thing that exists in the world to a risk-free asset, right? But that doesn't mean that they can't fluctuate over time. And I was reading this post by a guy named Ben Carlson of Ritholtz Wealth Management. Yes. He writes this great blog. And he was pointing out that the 2020s have been the worst decade for treasury market returns in like 90 years or something like that. I mean, worst. Just the worst. People seem not to make a big deal of it. He points out partly because if you buy a treasury and, it can fluctuate up and down, but if you just hold on to it, eventually you're made whole. You get back your principal and
in nominal terms.
In nominal terms, absolutely. And in real return, I mean, the real returns have also been horrific. Because of how high inflation has been.
We had 40 years of
years.
no inflation, and we started to think it was just a scary story our parents told us to make us go to bed. But it turns out to be a real monster, and it bit us.
Yeah. So if you've held longer-term treasuries for the last few years, you got crushed. And I guess my question is, number one, like, what do you make of it? Number two, does that mean that there might be better times ahead for treasuries? Because the flip side of what you said earlier, which is that if things are really highly valued, then in the long term, you're going to get lower returns over time, would be if something has gone down by a lot, then maybe you're looking at a better road ahead.
The most important and most persistent debate in finance since I started writing the newsletter 4 or 5 years ago is whether, maybe it was at the start of the pandemic. It wasn't just the pandemic, but we had a kind of regime change in interest rates. Whether the long period of low interest rates was an anomalous moment, and that's over now, and we are into a new regime. And this kind of brings very large and complex economic questions about what interest rates are and so forth, almost philosophical questions, to go back to what you said earlier. And there's people on both sides of the debate. I am a regime change kind of guy. I think in particular, the kind of post-financial crisis, pre-pandemic, close to zero real interest rates regime was totally fake or anomalous.
Anomalous, yeah. It lasted for a decade.
It was real. And you can't say it's fake. It happened.
Right.
But it was an anomalous thing that's never coming back. So where are treasuries now? So treasuries are kind of 4.5% now in nominal terms. Inflation's about 2.5%. You got about 2% real interest rate. And what does that real interest rate compensate you for? There's a huge philosophical debate. What are you getting paid for? But a big part of it is you're being paid for inflation risk. as you said, you only get the money back in nominal terms. So you're going to have a higher real interest rate when you buy a treasury. That is the interest rate minus inflation. If you think there's going to be inflation volatility in the future, you need to get paid for taking the inflation risk.
Yeah.
And I feel like, and I want at least 2%. Right. Real. I'm not super comfortable with that much cushion in my treasuries right now. So, whatever the president may huff and puff about, I feel like treasuries are kind of rationally priced to perhaps need to be even cheaper for me to be that excited about them. And I certainly think the old kind of 60-40, 70-30 portfolio, 60% equities, 40% bonds, treasury bonds, I don't think that's going to work as well in the future. I think inflation is going to be more volatile. And we can talk about the reasons I think that. There's a list that I'm sure you're familiar with. And so I think treasuries, they were never totally risk-free. They were free of everything but inflation risk. America prints these pieces of paper. The printing press is not going to break. You will get the nominal sum back. But I think inflation risk has changed. That means treasuries have to be cheaper relative to the dividend payment that you're getting on them, or the interest payment you're getting on them.
Reasons for more volatile inflation. What are some quick ones?
Governments have somehow found a way to become more fiscally irresponsible than they even have been in the past. So I'm sure you've talked about the budget a lot on this show and so forth. And, you're playing with fire. You keep printing these deficits. And it's been okay so far. But if people start to think that your fiscal posture is long-term inflationary, the bond market will, long-term, it's going to be inflationary in 10 years. The bond market will discount that today, right? And so you can imagine a world where people are like, this is really bad. And you get, 1 or 2% more yield. You go from a 4.5% yield on a treasury to like a 5.5 or a 6. And it's going to be cats and dogs living together, boy, because that means the budget is suddenly unsustainable.
Yeah,
because the interest rate on the, and so now the government has to do austerity so it can pay the interest price. And so now you have high interest rates and a government that is doing forced austerity. That's a financial crisis.
I thought you were going to go to the threats to independence of the Federal Reserve as a source of volatility, because you didn't say inflation would just be way higher in the future. You said it would be more volatile.
Yes.
Right.
And look, if you start to think, the government can, in extremis, one way or the other, say, we can't pay these debts, we're going to inflate our way out of them. Governments do this, right? It's one of the several awful options you have to get out of these situations, and maybe the most likely one. And the way to get that done would be to get a complacent Federal Reserve in place. But the reason I don't think that's going to happen soon, the reason I believe that Trump will chicken out before he puts a total patsy in the Federal Reserve is because that's actually very unpleasant. It's not like you put a wimp in the Federal Reserve who puts rates too low and it's just like a happy, clappy, good time and we all live in bigger houses and have cheap mortgages. Inflation comes back and everybody's pissed. Donald Trump just watched inflation destroy Joe Biden's reputation. Is he lining up for some of the same treatment? Does that excite him? I wouldn't think so. I think he just likes complaining about the Fed.
That all may be the case unless you come up with another acronym for chickening out. And then he might put in place the patsy, right? The difference between writing about finance and being in finance, what was the biggest shock when you made that change in terms of just how you did your work? How you lived your life?
Okay, it's a very different talents. Cardiff, in the part of finance I'm in, it's very much about making calls. It's buy this stock, sell this, short this other stock, right? And it's one thing to be able to understand a business. I think that part of being an analyst I was quite good at. What are the fundamental economic drivers of this business? How does it really function? How do you read the financial statements and talk to the company and figure out how the machine works? That's a real set of skills not everybody has. I can do that okay. But then somebody else has to make a call about the future. And that has a lot to do with not only understanding the business, but knowing your own risk tolerance, having a feel for what else is going on in the market. It's a much purer talent, harder to explain, more intangible. I was terrible at that. I'm terrible at making calls. And so I'm like good at sort of understanding what's going on, but in that making the hard calls in a timely way at the right time, I was just too much of a coward to do that well. So I got to a context where I can be like, I'm just a noticer. I'm just the guy who looks at this big complicated machine and says, hey, look at this little part over there. How's it related to that little part? What are the things? How do you break down the numbers? And how do you explain it all in a way that people can understand? That turns out to be my skill. Rather than we have a stock picking contest at the FT every year, and my results in that contest are horrific. Right? I never make the right calls. And that's just not what I'm good at. Yeah. So that's what I was, when I mentioned failing my way to success before, this is what I'm talking about. Eventually, kind of philosophy, finance, and I find myself into journalism where I'm like, the job is just explain as clearly as you can what is going on right now. That I can do.
You wrote a column going back to your philosophy roots about the philosopher René Girard.
Yes.
And I loved the column. It included this line, choose your enemies carefully. You will resemble them before very long. Yes. What did you mean by that?
Do you read Girard? Have you read any Girard?
I have not.
Okay.
I've just read your version of it, so I'm trusting you.
So René Girard was a kind of anthropologist, and he made this argument. I would put it like this. The kind of Enlightenment picture of human beings is that we are economic agents who pursue our interests, and that our interests have to do with what gives us pleasure or pain or joy or sorrow. What Girard said is actually that's not the fundamental picture of what people do. The most fundamental thing that people do is imitate one another. That we're not looking within to find out what we don't like, and we look to other people to figure out what's valuable or what is worth having. We are imitating creatures. And that's part of the reason that we are able to learn and be dynamic and innovate and all that, is we can gather all this information. But, and this is Girard's key insight, is that this puts us at one another's throats. Mm-hmm. So you want the apple, I want the apple. And even if, and we all of us who have kids know this, even if there's two apples, or two toys.
Yeah, I want the one you want.
You want the one.
Yeah,
That's a Girardian. And so soon we're at each other's throats. He has a kind of Christian view of how we break that cycle, but we get into rivalries. That is the key insight. And what we do to break out of the rivalry is we pick on a scapegoat. And once you see this kind of pattern, imitation, rivalry, scapegoating, it just appears to you everywhere. And, we seem to be in one of those moments now. I look at the political left and the political right after reading Girard, and it's like they're imitating each other. It's not like the left invented cancel culture and the right was like, we'll never do that. They were like, good idea.
Yeah. We'll cancel the stuff we want to cancel, right? Yeah. Well, you give the example of, and this is, I'm quoting you, anti-woke campaigners respond to left-wing censorship by removing, in quotes, offensive books from libraries.
Yes.
So it's like anti-woke, but on the other side.
Yeah, and I also think the Reagan Revolution was an imitation of the liberal 60s. The liberal 60s was like, from a left-hand point of view, the man is pushing you down. And Reagan's insight is that you can say that on the right, too.
The government is pushing you down.
But it was the left thought it was the government, too.
Yeah.
Right? Vietnam War or whatever, and they're just mirroring each other, right? And I just think if you read Girard and you think about Girard, you can break free. You can catch yourself getting into one of these idiotic rivalries. And if you work at it, you can take a step back. Or that's the dream.
Yeah,
anyway.
you make the point that Girard's solution to getting out of the rivalry was a very kind of Christian idea of forgiving your enemies or loving your enemies or whatever. And it's fascinating. The one thing that bothers me about all that is the idea that there's some inevitability to it, right?
Yeah.
That people can't apply their reason, apply their scrutiny, apply their judgment. Because I think I try to think about the way I experience the world, and it feels like the push and pull between those two things.
Yes.
Yes, I feel myself starting to mimic other people, right? That mimetic pull or whatever.
Yeah.
But sometimes I actually do stop myself, and I'm like, actually, like this thing that I'm feeling, whatever envy, jealousy, other things, this is stupid. I don't have to compare. I can just do my own thing and be happy, and it's fine. It feels like there's an anti-agency component to this theory.
Yeah. No, I think in a way Girard's theory is quite dark in that he does feel that barring a almost miraculous moment of renunciation and forgiveness, we're always sucked back into these rivalries. I mean, but part of his view, especially at the end of his life, was like the world may end, right? You get into a mimetic rivalry where the two sides are armed with nuclear weapons and everyone dies. Right?
Wow.
You know what I
Jesus.
mean? So his view at the end of his life, I think, was either make like Jesus or everyone is dead. And like you, I'm not ready to go quite that far.
Yeah. God. All right, let's close with a little menswear fashion segment. Okay,
Yes.
one of the topics that you also write about quite a bit. I'll share with the listener that one time I was at the Financial Times with you because we're former colleagues. I haven't mentioned that yet.
Yeah.
You and I used to work in the same
Office.
place, same office, and I was wearing like jeans and a blazer, and you'd been on like a years-long campaign against us. And you came to me and you were like, "Listen, you don't do that," okay? And you laid out the fashion reasons or whatever. And I was like, so I have two options. Either I need to upgrade the jeans to slacks or
take off the jacket.
Take off the jacket. I took off the jacket, right? I felt like
Well,
being a little cash. But it was interesting. And I think, if I'm not mistaken, you've largely won that battle.
I'm very surprised to hear you
I just
say
haven't
it.
seen it. I know
There's less of it around. 5 years ago, there was so much.
Yeah, it was the
Right.
the VC uniform, I think it was called, right? But I don't see it as much.
Well, part of it is we are in this long multi-decade post-war slide towards total informality, right? Where nobody cares about anything. And so maybe the jackets are
falling
just
into nihilism.
Yeah, clothing nihilism. You know, my argument has always been that a little formality in dress goes a long way in terms of, it makes social life easier and clearer and more fun and more decorative in a lot of different ways. But it's not always easy in the modern world to live up to the stuff that I write about. And that is particularly true when it is 100 degrees and humid in New York.
Like it is today. It's 95 degrees in New York. Yeah, it's really hard.
And like that, to me, I think that is the hardest menswear challenge. Like for me, I think suits look great. And in the fall and the winter and the spring, I put on a suit or slacks and a jacket on. And there's a reason that outfit has been around for 150 years. It's easy. It looks good. You can mix it up. It's loads of fun. But what are you supposed to do in the summertime? It's horrible.
Yeah, it is.
I'm a sweaty guy. It becomes like literally disgusting if I wear a second layer of clothing in the summertime.
Yeah.
I don't know what to do
and really,
about that.
like uncomfortable and stupidly uncomfortable. You don't have to. My question.
So is it time to give up and wear shorts to work? That is my question for you. I mean, if you worked in an office proper, I don't know if you do. Do you have an office life?
In D.C., I go to the office when I'm there, right? I work from home otherwise. So at home, I'm definitely going to wear shorts.
I'm ready to think about
shorts. You might go there.
It's so bad now.
Here's my question.
Climate change.
You
it's
write
terrible.
But you write so much about the evolution of
Yes.
it's not supposed to be this one static thing
No.
where like this is right and wrong and that's the rule forever.
No,
it's supposed to change over time.
Historical context is everything.
Yeah, and I was sort of fascinated by a point you made on a panel I saw you on a little while ago that the FT put on, which was that apparently the way that elegant dress for men developed was that some Americans were trying to mimic, again, the way the British royals dressed.
Yes.
But the Americans did a really bad job of that imitation, and that bad imitation ended up being like re-exported to the rest of the world.
I know.
And that's how everybody dresses.
Yes, it was weird. I mean, that's exactly right. And so what we think of as Ivy or preppy style in America, which is one of the core stylings of America, is however you want to think of that. That is basically a weird imitation or a weird American imagining of what British aristocrats wear on the weekend.
Okay.
You know what I mean? Like traipsing around their country house or whatever, and, all of this stuff. But it's interesting that now that stuff has been re-exported, those ideas, to the UK and beyond. So it's always, it's a narrative art clothing.
And that's
the
why,
story always changes.
Yeah, what's fascinating about that is that when we think about like dressing well now,
Yes.
Okay, it probably shouldn't be the exact same as it was 20 years ago
Of
or
course
10 years
not.
ago. So
it would be boring if it was.
Yeah, it would suck. And so I think about how do you actually pin it down? How do you define, this is a good style versus, this is a bad style, but maybe that's just the way style has evolved. Like, how do you at some point grab onto some kind of timeless principle?
I don't know if there's a timeless principle, but I would say this. The only really dumb view about clothes is that they don't matter. Clothes are inherently communicative. They don't just keep us warm, protect us from the sun, whatever. You're telling a story, and human beings are always going to tell some kind of story with how they dress. And the principle is tell the story you want to tell. And when you say clothes don't matter, I'll just wear whatever, the story you're telling is I don't really care about the people I'm with. I think, that you have to accept. There's a Girardian point in here somewhere. I don't know exactly where it is.
Mixed in somehow, right?
But you're telling a story. Tell your story, and that's why history is so important. Communication is always bounded by what was said before and before and before.
Yeah,
so.
It's interesting because you could imagine a world where like shorts do make a comeback, or maybe not comeback, but
it becomes acceptable to wear at work.
And I have to imagine that there are some super hot parts of the world where it is okay, and it is not considered inelegant or offensive or anything like
Bermuda.
that to do it. Right. And you could find a way to make it look good.
There is nothing inherently offensive about knees, I don't think.
I hope not, because we all got them, And I was also thinking about something else that you pointed out on that panel, which was that vests seem to have taken over a lot of menswear in the professional spaces, in finance.
Yeah, the fuzzy vest.
Yeah, and I'm wondering if that maybe also has been due for a backlash, because I was reading a writer named Emily Sundberg who had just did a quick newsletter where she texted some people in a group chat, and she asked, are you guys all still wearing the vests or whatever? And apparently they're like, no, nobody would be caught dead with those now. And these were young guys, on Wall Street.
Right.
And I saw that and I was like, this is a sample size of exactly one, and it's secondhand. But maybe it's time.
Yeah, I always thought that looked terrible. And if the Midtown uniform is disappearing,
the Midtown uniform, to be clear, is what is that again?
Khaki pants. Like one of those awful hybrid, not formal shoe, not a sneaker either, kind of, or maybe it's a sneaker, but a collared shirt, an Oxford shirt, let's say, and a fuzzy Patagonia vest, hopefully with some kind of corporate logo on it, BlackRock or Blackstone or Goldman Sachs or whatever. And, what story are you telling with that uniform? You're telling, I am a young person who makes money. I am too busy being successful to really be decorative, but I'm sending a message about what my tribe is, which is the tribe of the people with MBAs who push numbers around on a screen,
So rude. So rude. What other big mistakes do you think men should avoid in their professional wear?
I am constantly surprised by, first of all, and everybody has acknowledged this point, so this is not an original point on my part. That hybrid, sneakery, shoey kind of thing looks bad 100% of the time. Mm-hmm. If you are going to work, wear work shoes. And if you are going to wear work shoes, polish them. Polishing shoes, not very hard, makes you look a load better. You pay money for shoes. They're made of leather. Polish them up.
Yeah.
And it's actually kind of a fun activity. Listening to the radio, listening to a podcast, polishing shoes.
What about fit? Because, there was the skinny jean thing. There was the tighter. I can tell you what you feel about that already. But, there was the tighter fit. I think that seems to have been undone. I bought a suit recently, and I was asking the person who was fitting me for it,
yes,
what's going on with this?
Yeah.
And she made the point. She's like, actually, that tighter fit is sort of on the way out.
Yeah,
now. And I can't tell with these things. But.
Look, I am a large, sweaty, middle-aged man. Even not taking into account how I look, I'll need some ease. I live an active life. I'm warm most of the time. Not only do I need to feel comfortable, but I need to look like I feel comfortable because that puts the people around me at ease. And so I always thought the skinny look for men, which I think, by the way, was a lot about showing off physique, demonstrating you have big muscles in your thighs and your biceps, actually looked bad because it looked like it wasn't that fun to wear that clothing.
Yeah.
So good riddance to that.
But
I mean,
you could go too far the other way too baggy, whatever.
Yeah.
You
You want to be able to sit down without the seam that runs along your thighs straining, right? You want to, it's not, this stuff is not that complicated. When you buy a suit, raise one of your hands. If the suit is wildly distorted just by you holding your hand above your head, the suit doesn't fit that well.
Yeah.
Right.
Just give it a little thought. Be deliberate.
Yeah. I think that's right.
Last question is about hats, actually. You wrote a column about this recently.
Yes.
And it was interesting because you are not what the ancients would call a hirsute fella.
No.
Right?
Yes. I am bald. Very bald man.
Also, the ancients didn't say hirsute fella. Socrates wasn't like, I got another question for you.
But historically, Socrates is depicted as bald, I think.
Okay.
Yeah.
So you were talking about the different kind of hats to wear, because hats have been sort of out as part of like a formal outfit for a long time. Maybe they should come back in though, right?
Maybe. I mean, I'm a guy who needs head protection.
Right.
Right. And I'm sitting here across the table from you. We both wore baseball hats today. And a baseball hat is a very practical thing. I just don't think it looks that great. I think it looks like you're a little kid. You're like, hey, Ma, can I go play ball with the boys? It's like, I'm a grown man in his 50s.
You said that baseball hats are for zillionaires trying to cosplay as normal people
or
something like that.
Yeah.
I have a counter to that, actually, about the baseball caps making you look like a kid.
Yeah.
I feel more like I look like a kid if I wear shorts and a T-shirt without the baseball cap. And the reason why is that the cap signals that you're being deliberate in the casual dress you're wearing. It kind of rounds things out that way.
I see what you're saying here.
Whereas if I just wear shorts and a T-shirt, it looks like I'm an 8-year-old boy on his way out to the park or something. You know what I mean?
And the other, the other problem with hats is other kinds of hats tend to look a little anachronistic. Fedoras and Panamas. They're kind of that like
try hard.
Yeah, they're a bit try hard, and they're a bit like I'm a gent from the 1950s. I don't like deliberate anachronism in dress, the kind of waxed mustache hipster thing. You want to look like a man of your time, and it's hard to do that with a hat. So I would say hats for me are an unsolved challenge.
Rob Armstrong, it has been quite a ride.
It has.
Friend.
This is great fun.
Philosophy, markets,
hats,
tacos,
hot dogs,
everything. Thanks so much for being here.
Thanks for having me.
And that's our show for today. You can find links to Rob's work in the show notes for this episode. The New Bazaar is a production of the Economic Innovation Group. Adrian Lilly is our sound engineer, and our music is by Scott Lane and DJ Harrison of Subfloor Studio. Special thanks to Ruben Francis and Stephen Leverton for production assistance. Please follow or subscribe to The New Bazaar on your app of choice. If you like today's show, please leave us a review or tell a friend. If you want to get in touch, I'm on Twitter, or X, I guess it is now, as @Cardiff Garcia, or you can email us at thenewbazaar@eig.org. And we'll see you next episode.